Hi, I'm Jessica Rabe, co-founder of Data Trek Research. In today's brief but important video, I'm going to compare the Nasdaq Composite's performance since its December 2022 lows to the 1990s tech bull market. More specifically, this chart shows an index comparison of how the Nasdaq performed in the 1,000 trading days following the start of 1995, marked by the blue line, versus its low on December 28, 2022, to the present, marked by the orange line. Whenever we publish updates on this chart in our daily reports, we get a lot of client comments, and it's easy to see why. History seems to be repeating almost exactly. I have 2 points to put some context around this data. First, we started our comparison in 1995 because that year had a similar macro backdrop and bullish catalyst as the Nasdaq's latest rally. Like 2022, there was a Fed rate shock in 1994 after a period of low rates. There was also a lot of enthusiasm about a new disruptive technology with the internet, which started to hit critical mass in the mid-90s. For example, Netscape went public in August 1995. As for today, ChatGPT launched at the end of November 2022, a month before the start of the current tech stock rally, which has been largely driven by enthusiasm for generative artificial intelligence. Second, the comp is following its mid-1990s experience to a truly amazing degree. Today marks the 615th trading day from the Nasdaq's low in December 2022, and it's up 93% since then. On the same day in the 1990s tech stock rally, which was in early June 1997, the index was up 87% from the start of 1995. The path higher during both timeframes hasn't been linear. In the back half of the 90s, there was everything from valuation concerns after former Fed Chair Alan Greenspan's irrational exuberance comment to Fed rate uncertainty given worries about the reemergence of inflation, and then later on there was the Asian financial crisis and blow-up of the hedge fund LTCM. But the Nasdaq was able to power through it all until March 2000. So the takeaway here is that the mid to late 1990s experience shows bull markets occasionally face pullbacks from growth scares, policy uncertainty, and valuation concerns, all of which are happening now as well. But large cap tech stocks recovered quickly from resolutions to these issues and went on to rally for years until March 2000 as companies capitalized on the internet going mainstream. And yes, this example eventually turned into a bubble that then popped, but we think this comparison shows that US large cap tech stocks are still early in a secular bull run driven by Gen AI, just like the internet in the 1990s. And that's one reason why we have viewed the last few months of volatility as a buying opportunity. So just a quick example, we published a report to our clients back on April 10th that the Nasdaq 100 and US large cap tech sector should rally since both hit 3 standard deviations to the downside over the prior 50 days, and they're up 20 and 25% since. And our 1990s comparison shows they should continue to rally from here. So with that, thanks so much for taking the time to watch this video. Please hit the like and subscribe buttons and share it with whomever you think might find it useful. And you can also sign up for a 2-week free trial on datatrekresearch.com to receive our daily investment newsletter. Thanks again for watching, and we hope you have a great day.